Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at First Majestic Silver.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
Yeah, Les.
For those of you tracking the precious metal sector, First Majestic is, well, it's a story of some astounding growth.
Astounding is the right word.
But it's one that comes with a really critical piece of accounting nuance that we absolutely have to unpack.
Okay, let's unpack this immediately, because the headline numbers they're spectacular.
They really are.
We've seen a stunning operational performance that just reflects how massive this silver bull market is right now.
Right. So looking at the top line, Q3 2025, they posted a record revenue of $285.1 million.
Which is almost double year over year, a 95% jump.
That level of growth, it's not accidental. It just shows incredible leverage.
Operational gearing, right, to the rising price of silver.
Exactly. They are perfectly positioned to capitalize on this commodity boom.
And the source of that revenue surge was just sheer phenomenal production.
It all came from production. They clocked a record of 3.9 million ounces of silver in Q3 2025 alone.
Which is up, what, 96% year over year?
And when you combine that with their other metals, they generated 7.7 million silver equivalent ounces. I mean, that's an operational triumph.
It is. But here's where the analysis requires, a deep breath.
This is the nuance.
Right. Despite setting all these records in production and revenue, the company actually missed Wall Street consensus estimates.
They did. Revenue came in a little shy, and Q3 earnings per share, the standard bottom line measure, hit 7 cents.
Significantly missing the 11-cent expectation.
Which is the central paradox, isn't it? How do you have a record-breaking quarter and still miss?
Exactly. If you're just reading the headlines, that looks like a serious crack in the foundation.
It forces us to look past that surface-level accounting and see the cash reality.
So what's the reality?
The entire EPS miss, it was driven primarily by non-cash depletion charges.
Okay.
This is largely a technical, a gap accounting effect that stems from the Los Gatos acquisition.
Non-cash depletion. That sounds like jargon. For our listeners who are tracking this, what does that actually mean for the health of the company?
Well, think of it like this. When they acquire a mine, they have to estimate the total lifespan of that mineral resource.
Okay.
Accounting rules require them to expense the value of that mine, the depletion over the years.
Right, as they dig it up.
Exactly. The Los Gatos deal shifted their whole depletion schedule, causing a huge paper charge that just drags down the EPS.
So it's an expense on the income statement.
But no cash actually left the building in Q3 to pay for it.
That context completely changes the story.
It does.
Because if we look at real money, their operating cash flow, the cash generated directly from mining, hit a completely separate record.
$141 million. That's the true sign of operational success.
So the operational health is fantastic, even if the reported EPS number took an accounting hit.
Exactly. And that strength translates directly into one of the most fortified balance sheets in the entire sector.
Let's detail that financial safety net. They ended Q3 2025 with an astounding record cash position of $569 million.
And critically, $435 million of that is entirely unrestricted.
Wow.
When you factor in all their liquidity, they have access to $583.8 million. That is some serious strategic firepower.
That cash hoard gives them flexibility, but it's their free cash flow, or FCF, that proves the model is sustainable.
Right, and they posted a record $98.8 million in FCF in Q3.
That's not just a slight bump either. It's a huge rise from the $31.3 million they generated this time last year.
And that FCF is the engine that's funding everything, the growth, the shareholder returns.
And they're certainly using it to reward capital. Year to date, they've returned $12 million to shareholders through dividends.
It's a quarterly payment of 0.00052.
Plus, they executed $4.3 million in share buybacks. So they're managing to grow aggressively and fund returns at the same time.
And they've been really smart with their liabilities, too. They successfully refinanced $350 million in debt.
With convertible notes, right?
Yes, and instead of facing near-term pressure, those notes are now due in 2031. They've extended their maturities and strengthened their financial structure for the whole silver cycle.
Okay, so moving from financial engineering to their actual competitive position. This is crucial.
This is the core thesis.
Because the market isn't just rewarding good miners, it's rewarding miners who give investors maximum exposure to the silver price itself.
And this is it. Their key advantage is their commitment to being a pure-play silver miner. Silver makes up 57% of their total revenue mix.
57%. That makes them the ultimate leveraged play in this sector.
To truly appreciate that number, you have to look at their peers.
Right, like Hecla Mining.
Yeah.
Silver, there's only about 44% of their revenue.
And Pan American Silver is even lower, around 24%.
The consequence of that difference is just profound.
This company is structured like a sports car designed only for the silver track. When silver surges, and we're seeing it trading robustly around $75 an ounce.
Their revenue, their margins, their stock price, it all rises disproportionately higher than their peers.
But that leverage only works if their operations are efficient and the assets are high quality.
That's the question. Are they just lucky because of the high silver price, or are they genuinely getting better at mining?
They are absolutely getting more efficient. They are concentrating on high-grade assets like Santa Elena.
And the Los Gatos integration has proven effective.
Very. Look at their cost control. Their Q3 all-in sustaining costs, or AISC, came in at $20.90 per silver equivalent ounce.
And what does that $20.90 AISC tell us in context?
It tells us they are swimming against the tide of inflation. That figure is actually a 1% decrease year over year.
A decrease. Wow.
In this environment, with labor shortages, rising energy costs, reducing costs is a powerful testament to their operational discipline.
They're producing more for less,
which dramatically widens their margin against a $75 silver price.
Well, the market has certainly noticed this combination.
Oh, definitely.
Let's shift to the technicals. This stock has seen an explosive move recently.
It has. It surged to a 52-week high of $17.42. That translates to a massive 206.5% gain over the past 12 months.
A 206% gain. Incredible. But for listeners considering this now, isn't there a risk we're too late to the party?
It's a fair and critical question.
Has the stock already priced in the $75 silver environment?
Well, when we analyze the current market mood, the overall consensus price target from analysts is $17.33.
So right around where it's trading now.
Exactly, around that $17.08 level.
Good.
So the consensus implies that while much of the rally has been digested, there is still some measured upside.
Provided the macro environment holds steady.
Right. The market expects that operational momentum to continue.
And that bullish sentiment is being constantly reinforced by company-specific news.
It is. The successful drilling at Santa Elena expanded mineralization, which is crucial.
We have the debt refinancing and, importantly, the sale of the non-core Del Toro mine for up to $60 million.
Selling non-core assets to fund growth elsewhere is always a great signal.
Definitely. So shifting our focus to the horizon, what are the key catalysts in the next 3 months?
The next major inflection point is the Q4 2025 earnings release. We expect that in early February 2026.
That's the moment of truth, to see if they carry that record momentum through the end of the year.
And the benchmark for those earnings is their full-year guidance. They're targeting between 14.8 and 15.8 million silver ounces.
And 30.6 to 32.6 million silver equivalent ounces. Investors will be scrutinizing those numbers.
Especially how the Santa Elena expansion is progressing. That's a major CapEx focus.
And operationally, there's also a leadership transition coming up.
That's right. It signals strategic continuity. Manny Alkafaji is stepping into the president role in January 2026.
Working with the current CEO, Keith Neumeyer.
It shows a commitment to maintaining that high-grade asset strategy.
But none of this matters as much as the big macro driver.
The undeniable tailwind for precious metals.
Silver is fluctuating between $69 and $75 an ounce, holding these historic highs, and there are pervasive expectations for interest rate cuts.
Rate cuts are so important for these miners. They lower the opportunity cost of holding non-yielding assets like silver.
And when you combine that with a high commodity price,
it provides maximum support for the whole sector, but especially for a highly leveraged, silver-focused player like this.
Now let's turn the coin over and critically examine the bear case.
I have to.
We've presented a very strong thesis, but no investment is without risk. What could derail this?
The first risk we already highlighted, that Q3 revenue and EPS miss.
Even if it was technical, it did cause a wobble.
It did. It reminded investors that accounting metrics can be volatile. Beyond that, the primary risks are geographic.
Right. They have a high concentration of assets in Mexico. What does that expose them to?
It exposes them to potential regulatory changes, tax disputes, unforeseen hurdles specific to that region.
Mexico can be a complex operating environment.
And you have to consider the high capital expenditure for projects like the Santa Elena expansion.
Funding that is essential, but if costs balloon or timelines slip,
That eats directly into future profitability.
And finally, there's the run-up itself. With the stock performance and the $8.2 billion market cap, some analysts are starting to suggest potential overvaluation.
The argument that future price increases are already baked in.
Exactly.
And those are legitimate concerns. But we have to look again at the mitigating factors.
Okay.
The risks from high capex and operational shock are heavily mitigated by their massive cash position.
The $569 million we discussed.
Having that kind of liquidity and having the foresight to sell non-core assets like Del Toro, it gives them a powerful buffer. They can finance their growth without relying on expensive external capital.
So let's bring this all together for you. We've cut through the accounting noise. We've dissected the operational excellence. What is the final distilled investment thesis here?
Well, the core thesis is pretty straightforward. First Majestic Silver offers truly amplified maximum leverage to the silver bull market.
And this is all supported by their exceptional production growth.
And, most critically, it's stabilized by record operating cash flows that are fully funding their aggressive development while also providing capital returns to shareholders.
The suggested time horizon we see here is a multi-year hold to really capture the full momentum of the silver bull cycle.
But for those looking for shorter opportunities, operational updates and events like the Q4 earnings in February, they create potential swing trade opportunities.
And looking even further ahead.
What's truly interesting to me is the potential for institutional catalysts that haven't even been confirmed yet.
Okay.
I mean, if the Santa Elena expansions keep going this well, driving up future reserve expectations, and if silver prices hold above $75,
You think that could spark more interest?
significant institutional interest, this scenario could potentially drive larger-scale M&A activity in the sector, or maybe prompt the company to pursue even more aggressive share buybacks in the coming quarters.
So that's the next level of upside you should be watching for.
Exactly.
Make sure you subscribe, like, and comment to stay informed about all our analysis here on Smart Wealth with Joshua.